So my favorite topic of the day, compliance and security. Super happy to be moderating this one. Maybe we're just going to start with a quick round of intro. Jason, do you want to start?
Yeah, hi everyone. I'm Jason Allegrante. I'm the Chief Legal and Compliance Officer at Fireblocks.
Hello everyone, my name is Matthias, Bauer-Langgartner. I'm heading up European policy at Chainalysis, a blockchain analytics company.
Fantastic. My name is Sheraz, Ahmed, Managing Partner of Stone Partners. We're a management consultancy firm based out of Switzerland.
Thank you. So obviously one of the drivers for compliance and for how we actually implement our product and for the security we need within our tools is regulation. Regulation has changed quite a bit over the past 2 years. We've been seeing some framework evolving, MiCA in Europe, some framework evolving in Middle East, in Asia, maybe something happening in the US, we'll see. Can you tell us how it impacts the way you are doing your job on a daily basis and how you're building your product, right? So what's the driver of regulation on how you're implementing your respective product? Matthias, do you want to start?
Yeah, thank you very much. Yeah, so where do I start? I mean, regulatory frameworks, they obviously are evolving not only for the last 2 years, but over the last, I would say, nearly 10 years. You know, we've been talking a lot about crypto as this unregulated space, and that's clearly not the case anymore. It all started with anti-money laundering rules, transaction monitoring rules, and in Europe, for example, they have been implemented in 2018, so quite a while ago. And this has now been pretty much standard and is expected from crypto asset service providers, from virtual service asset service providers, to make sure that they understand the risk of money laundering, of terrorist financing, of engaging with sanctioned entities. And this obviously, you know, has been part of a really important part of the evolvement of our blockchain analytics tools. We all at Chainalysis, we basically started off with investigative tools, so being able to trace funds, crypto asset transactions to a source in order to solve crime. But now, you know, in last years, we've been working a lot on the markets in crypto assets regulation, which is a complete game changer in terms of crypto assets regulation. It's not only just AML, terrorist financing controls. We've got a whole new network, basically a financial services regulatory framework in place that I'm happy to dive into. But it really shows that crypto has evolved from something that is mainly seen as a value transfer thing to something that is, I would even say, like a parallel universe in the financial services industry, hopefully merging into the financial services world more broadly. And the rules that we see in MiCA are essentially financial services rules. They include a lot around how a firm is organized. You have got prudential rules around how much money you have to hold, there's shareholder assessments, there is reporting requirements, there's transparency requirements, there's market abuse requirements. And we as a firm, we look at what are the regulatory requirements. We actually shape them together with regulators, together with the industry, to make people aware of the transactional transparency and the importance of on-chain data and how you best use it. I'm happy to dive into an example of like market abuse, but the idea really is we need to make sure that we use all the tools that we have in order to build a financial ecosystem that is much better than the one we have at the moment.
Jason?
Yeah, I'd love to jump in. So at Fireblocks, we really think about it as a question of product market fit, right? And what regulation is doing is pushing the market in a certain direction, and MiCA is a wonderful example of that, right? So, you know, about 6 months ago, we were meeting with the exec team, and I said to them, guys, we're about to have a whole bunch of customer firms who have never experienced regulation before, never experienced compliance obligations before, who are going to get pushed into a regime where this is something they need to think about very seriously. What are we doing at Fireblocks to make sure that our product is fit for purpose as they move into a new phase of their regulatory life? And you know, I think this is true for our product across the board. So we're always monitoring the environment. Sometimes it touches on Fireblocks indirectly or directly, and we can talk about the impact of DORA. But in other cases, our customers are going through this, and so for our customers to go through that journey successfully, we need to be thinking about what capabilities we have on the platform, what partners like Chainalysis do we have that we're working with, and so it really is driving our product along as it drives changes in the market overall.
Yeah, it's not just a layer above the product, it's actually a feature aspect of it, right?
Yeah, I mean, I very much look at it as an opportunity, right? I mean, if we can identify what our customer needs are in advance because we're talking with the regulators, we understand what's coming into effect. We can then talk with our customers and educate them on what's coming into effect. And then if we can build that into our product and then turn around and say, hey, the product is fit for purpose as well, then that's amazing for us.
Sheraz, do you want to comment?
Yeah, thank you. Happy to compliment on what my two panelists have said. I think it depends on, of course, the audience that you're trying to address, but I think for the regulated entities, it's definitely something positive. I think to address the degens in the room, because we are at NFT Paris after all, I think a lot of people have told me that regulation is bad. A lot of them are like, oh no, we don't like DORA, we don't like MiCA, we don't like these things. And ultimately I'm like, well, hold on a minute, it's going to be better for you in the long term anyway, because even if you look at things that have happened with related to FTX, related to a lot of things where even when the degens were winning, ultimately most of this industry ended up losing through that kind of multi-year bear cycle and the like. So having better regulation, having better cybersecurity in place and the likes, and better just kind of third-party operational risk management is going to allow us as a whole industry to have better longevity in the things that we're doing. So ultimately, even for the smaller players, albeit the fact that it's going to be a little bit more costly to operate, it's going to be a little bit more cumbersome in certain ways, I think things will get easier, but ultimately the longevity and the money flows in the market are just going to be better, and so ultimately it's going to be better for everyone. But I think it's important as well to address the people in the room that, yeah, they shouldn't be too afraid of it. It's good for them as well.
Matthias, I think you just said something about the fact that you have been doing compliance way before there was a regulatory framework, right? So 10 years ago, I think actually your early adopters were governments, right? So you started building compliance tool with governments agencies. We've been very, very reactive in how we've seen, AML and how we've built all the compliance around crypto until now. But I think there's been a shift in the tools and the solutions we're offering in the market for the past 2 years, where we intend to actually be preemptive and have builders actually not get into the situation where they need to have Chainalysis to tell them, well, that was a wrong transaction and you should have blocked that. Do you want to comment on it?
Yeah, I mean, you're absolutely right. Regulatory expectations are typically set after a certain technical level is manageable for firms. So regulatory expectations are sort of like always limping behind what is actually technically possible. So there's loads of firms who apply best practices. They do more than they need to do from a regulatory perspective. And that's also how our tools evolve. I briefly said that we started off back in 2015, 16, tracing Bitcoin transactions. It was all around investigations. Now with changing regulatory landscapes, we have then implemented Know Your Transaction tools, so you can actually look at all the transactions that you receive or transactions you would send to different addresses to understand who these people are from a service perspective. We don't trace any sort of like individuals, but we work with firms and attribute firms, which is now expected of all firms. But we're moving into better understanding how we can use blockchain analytics even more to make ecosystems safer. And so there's a new wave of blockchain analytics, and it started off with looking not only at transactions on a transactional level, but actually looking into specific entities. So when you act in blockchains and you've got this transactional transparency, there's a lot of value in actually understanding who you interact with and who these people interact with as well. So we can make sure you understand incoming, outgoing transactions on an entity level. But we even can do this on an asset level, so really looking horizontally across the whole asset class to understand who the biggest holders are, what the sort of like the transactional relationships are between these holders, and whether or not there is illicit usage of a specific asset. And that's why I come into the realm of best practice. When you think about a stablecoin issue, for example, they've got this superpower to freeze assets whenever they think there is illicit activity going on, or it goes to North Korean hackers, to sanctioned entities, or just scammers. So because of that blockchain awareness and this ecosystem monitoring, centralized stablecoin issues can actually have an idea of where transactions go to, who's holding that token without being part of the transaction. And whenever they have got evidence of criminal activity, they can actually freeze it, which makes the whole ecosystem much more safer. And it gives you such a superpower that is unheard of in the fiat world. So you can actually make the new world better than that. But it goes one step further. We are also looking into behavioral analytics and try to understand transactional behavior to deduct certain insight from it, which can also help to make blockchain ecosystems safer. And that's the reason why I think this will accelerate blockchain adoption in the long term. Well, and in the short term as well. Yeah.
Thank you, Matthias. It seems that we've been, trying to educate the market on the tools, on how to, the do's and the don'ts, so the best practice for now a lot of years. I've crossed paths with Jason in, we're talking in discussions with regulators to explain also what we do and what's our business. Sheraz, do you think that we're done with education? This is it?
Yeah, education is always a funny one because you go from panel to panel and everyone's like, oh, we need more education all the time. I think we're never done. I think, there's also that saying where, you spend a lifetime learning. So I don't think we are. It would be great if we could make, let's say, steps forward in our education where certain things end up being a base. Unfortunately, sometimes in Web3, it's kind of like 1 year, 2 years, 3 years go by, and then it's like we forgot everything that happened in the past, and it's like, oh shit, why are we getting rug pulled again where we should know not to do certain things? So I think education is still important. I think there's still a lot of people that haven't entered into the space today. There's a lot of things that could be done better. Coming back to kind of the whole compliance and security kind of topic, I think it is good that those things are being in place because some of the newer actors that are going to be coming in aren't going to fall kind of into some of the traps that we have maybe over the past 10 years. And so, yeah, no, look, I really think education is important. Coming to events like this, we have a booth just at the back, and you had this relatively older lady that came by and was like, oh, I was very scared about Web3, and my son told me to come, so I came, but now I'm meeting all of you nice people, and it all feels great, so I'm less scared, and maybe I'll get my business involved in it. So I think it's really great that we in this industry do like to educate. I've not really met anyone before, if you stop them and you show an expression of interest or passion about the industry, that they're not going to help you and guide you a little bit further in it. So I think that's a really great part of this industry that I don't think we should lose, because I think we're quite far from where we need to be.
In which topics specifically?
Of where we are far in. I think if we look at the traditional financial industry or other traditional industries, I think sometimes they look at us and like, oh, these people are doing some like wacky stuff, etc. Are using are kind of even playing against each other. It's funny if you look at even sometimes in this room, we don't trust each other so much. On the previous panel, someone was like, what the difference is between right and wrong. Stop doing wrong, start doing right, and we'll have a better industry as a whole. So I think if we ourselves have a better self-accountability of some of the things, of course, bringing in, again, Dora, Mika, these kind of things is going to help us have to self-regulate. But I think, as you were saying, related to best practices, we already kind of technically know what we should and shouldn't be doing. And so I think if we can just do a little bit more of that, I think it's going to help us in the long term.
And Jason, just going back to this combination of education and having a preemptive approach, I think Fireblocks, as the leader in the industry it is in the wallet space, you've been very proactive early on in trying to define standards on how you should think about wallet, how you should audit a wallet. Do you want to speak about, do you think this is widely adopted enough? Do you think that is a tool that is useful for regulator? Should it be, taken a step further?
Sure. I mean, Clarice, you know this, right? Like we're in the custody space, and if you go into the physical or real-world asset world, right, custody is very boring, and nobody wants to talk about gold borrowers in a vault, right? That's not interesting at all. In the digital asset context, it's absolutely fundamental, right? And it's honestly one of the most interesting topics there is. To get people to where we are is a journey that takes a lot of effort, right? And so we think a lot about, right, our product. We also think a lot about how our product fits into the regulatory landscape and what we can do to make the whole industry better, right? And I think I think we have a real opportunity with DORA. DORA's caused us to do a lot of internal thinking. So for those of you who don't know, DORA is a regulation that came into force around the same time as MiCA. MiCA got all the attention. DORA was probably just about as important. But DORA attempted to harmonize standards for the evaluation of certain third-party service providers to financial institutions and CASPs. And that included technology service providers. And so a lot of technology service providers like a Fireblocks got caught up in that. But the point is, as we've gone through DORA and we've already been through an audit and we've been through the implementation phase now, we started thinking to ourselves, concepts of third-party risk management are not unique to Europe by any means. If you go in the United States context and you look up at the banking agencies' websites, you will find third-party risk management chapters in the supervisory handbooks for all the banking agencies, right? So the question is, to what extent should these concepts of harmonization and standardization across custody technology providers, across service providers as a whole to financial institutions in the crypto space apply on a global scale, right? And if that conversation hasn't started yet because we're where we are on the adoption curve and we're where we are on the education curve, why not take the opportunity to have that conversation now, coming off the heels of DORA in places where maybe that hasn't come to mind yet? So it's something we're thinking about a lot.
And do you see with the emergence of new use cases scaling, really? So not just crypto trading, but having, cross-border stablecoin payments. Do you see as well that with the entrance of newcomers like banks coming into the space, new type of financial players, do you see your role as a, leading the relationship with regulators and on the compliance side, do you see your role evolving from a Fireblocks standpoint?
Yeah, I mean, we've always seen our role as to partner with the regulator, educate them, go in with the customer, right, and try to help them understand. What I think is really interesting is we're now in a place where we can help them see the things that they don't necessarily see. And stablecoins are a great example. So I've been thinking a lot about what stablecoins means if the United States banks were to get into stablecoins, right? Everyone talks about stablecoins, the reserve requirements, what kind of entity can issue it. Nobody talks about what kind of wallet it goes into after that thing is minted, right? So unless you're in a world where it goes directly into the consumer's wallet and the bank never touches it again, and I don't see how that's possible if you're going to have a payment system, right? You need to have a conversation about custody. You need to have a conversation about infrastructure and wallet technology. So as we kind of see these novel use cases emerging, we're absolutely using that as an opportunity to say, hey, have you thought about this yet? I think the United States proposal to potentially have a digital asset reserve is the same thing. Okay, Treasury, you want to have a digital asset reserve. Where's that sitting? It could be that it's sitting at the U.S. financial institutions, in which case you need to have a private custody conversation. It could be that the United States Treasury wants to hold it itself, in which case you need to talk about replatforming the whole Treasury system.
Matthias, in this question of use cases, actually, does that have an impact on your product at Chainalysis? Cross-border stablecoin payments, new players entering the space. Does that change the way you build your product?
Yeah, I mean, stablecoins are massively important because they're essentially the killer app of crypto at the moment. When we look at, the market cap, it's around 3 trillion and, half of it is Bitcoin. But when you look at the transactional activity, 50 to 60% of value is transferred in stablecoins. So they are really, really vital to the whole ecosystem. What we do is we look at regulatory requirements. We together with regulators, lawmakers, our clients, and we know that we can actually push the boundaries of what is possible with our technology in order to make to ensure more insights, more safety, and basically ensure more adoption. I think the one thing that MiCA really does is it will allow firms, traditional finance firms, to have more regulatory clarity and actually, get, if they haven't already, get their feet into crypto by custody solutions. I think that's going to be a big one for their customers. But we also know of a lot of firms who are thinking about stablecoin issuance. And when it comes to stablecoin issuance, they want to make sure that they understand their ecosystem. And the only way to do that is to understand on-chain transactions. So we are really looking at all the data points that we have in order to make sure that the proper risk assessment is possible for firms. And that's what we also get pushed. And not only stablecoin issues, but also layer ones, for example. I hear that every day that if you do have a new technological platform where you don't really have any analytical insight into it, it's not of so much interest for TradFi players, for example. They need to have that, and we're helping.
I'll ask you the same question. Do you see actually the stablecoin use case emerging, changing the framework of how we think about compliance and security?
So there are a few stablecoins that try to come out of Switzerland that weren't able to really kind of make it to market due to the fact that FINMA asked, if I'm not mistaken, for 8 times the capital requirement. So then the business model just broke. So I guess you can break the business models of various kind of innovations through over-regulating or not doing it in the right way. I think FINMA will come back on some of those things, and there's a few kind of lobbying and discussions and educating coming back to it that's coming into play. Your question related to kind of innovation around stablecoins, or sorry, just
how does it impact the compliance framework, right?
Yeah, I mean, I think stablecoins, we collaborate a decent amount with Circle, and we've been having some conversation with Tether, which are actually approaching it from 2 very different angles. Maybe to kind of come back to what I was kind of mentioning a little bit before, I do believe that the space is very much going to kind of segregate and separate a lot like other industries. We're seeing, for example, to make a parallel, that either it's kind of the ultra luxury goods that are doing very well, or the ultra kind of like budget goods. Everything in the middle is kind of not finding its place. I think today we're going to see products that are ultra kind of regulated or kind of very much kind of for larger institutions, etc., such as the Chainalysis kind of Fireblocks. And then you're going to see those that are okay, like we can operate in other jurisdictions where maybe some of the requirements are a little bit lower, such as like Tether will in the global south. And there will be some more kind of, let's say, degen operations, potentially some DeFi-related protocols, potentially other kind of topics that will operate there. So I think we'll definitely see a bit more of a segregation between the two. And then either you're regulated or you're not. And if you're not, well, then you're operating in a different ecosystem, a different sphere. But to my belief, I don't believe that that's completely going to go away. So I think when we see it, our clients, it's just that some are looking to operate in different ways, but they will have to make a choice. And I think that today, to some people in the room, is not very clear. I think some believe it's like, oh, they're just going to be able to operate. It's like, no, you need to either make a choice, a little bit like Tether has, and relate to stable coins. I think, either you're going to become more regulated, operate with the banks, and operate in that sphere, or you're just kind of, be a degen stable.
Jason, what's going on in the US?
Thank you. So let me maybe give you 3 observations about what's going on in the U.S. So let's start at a macro level. So I've been telling a narrative about the evolution of regulation in this space for a couple of years now. It goes a little something like this, right? Coming out of the last financial crisis, we had global consensus around a set of reforms. It was sponsored by the G20 and the G7, and it was implemented as MiFID, MiFID 1 and MiFID 2, and the equivalent around the world. The point is that we had consensus coming out of a crisis, and the world moved as one, or the Western world moved as one. We saw very different geopolitical dynamics over the last couple of years. The United States was, out to lunch, doing whatever it did. That left a vacuum, and what we saw was, I would say, kind of regional spheres of influence developing, right? Obviously, Europe, first mover here, but also smaller countries kind of punching above their weight from a regulatory perspective. Singapore, HKMA and APAC, UAE, stuff like that. So we had these regional centers moving ahead while the rest of the world hung back. I think we're about to see a reversal of all of that. I think we're about to go back to a time that looks a lot more like 2010. It seems like the United States will come in. It's stated its intent to do so. That will at least be a major center of polarity, if not a new center of gravity. And it could take a lot of the world with it. So that's the high level take. But
and just to jump on that, do you think that it's likely that new center of gravity operates dramatically differently than the other framework that are around there?
I have kind of a take on that as well, which is that so we know this president. We know he's willing to go it alone on certain things, right? And I think to the point you were making earlier about the capital requirements, right? We know the capital requirements coming out of Basel are prohibitive for digital asset activities. I think this is an opportunity, if you will, or something that could happen, right? Where the president says, screw it, we want our banks engaged in these activities. We're going alone. We're going to implement Basel in a different way, a modified way, where we roll back perhaps the restrictions on digital asset activities. And again, that could exert its own influence elsewhere too, right? Because if the U.S. goes ahead and does that, that puts its banks at a competitive capital advantage vis-a-vis compliant banks. And you have to start wondering who else starts looking around and saying, I don't want to hold the bill for this right now.
That's fascinating. Thank you for the insight. Matthias, what's your challenge for 2025?
The challenge? Yeah, well, we've got thousands of pages of regulation in MiCA, and now we sort of have to get it on the road. And when I talk to regulators around Europe and also firms, there's loads of open questions around how MiCA should actually be implemented. And I think that's one of my main focus areas. Try to understand what is actually required to be compliant and help regulators, help firms to make the best out of what we have.
And do you think we're still ahead of the curve, or everyone is actually anxious now? Do you still have time? Have people, the time to get ready, be prepared, or,
Yeah, no, I think MiCA clearly is it's setting the bar. There's a question around how much the Brussels effect will follow after this. We are in front of the race when it comes to regulation, but crypto usage, crypto adoption is a different thing. And we see, as you also said, many different regulatory frameworks around the world in Asia and other places that are picking up. I think with the US now moving quicker, as it looks like, there will be much more pressure on other jurisdictions to catch up, because they will otherwise be left behind. I'm thinking about the UK, for example. I think we'll see more movement here. But it's regulation is one thing, but implementation and making it work is a completely different thing, and that's the challenge for 2025.
And that's your work. Sheraz, what's the opportunity you want to seize this year?
Maybe if I just kind of piggyback off what Jason said, I hope that we go back to 2010, not back to 2006. It's kind of like finding the right window there, maybe. Right, to MiCA, I think a lot of our clients are kind of even waiting it out until somebody gets the first fine and they're like, oh, this thing is a real deal, and then they're going to start implementing it. So please don't wait to get the fine and try to be a bit ahead of it. It's like you don't go to see your doctor when something is wrong, try and go see them beforehand. So that's what we're trying to, again, educate and the likes. But I think there's a latency between it costs more money to have to be more regulated, compliant, have better cybersecurity, etc., and then the cash flows that come in terms of investment in order to finance those extra costs, which do happen because people are like, okay, now it's more trusted, it's more stable, things are less likely to crash, my investment is a bit more secure, I'm ready to put more money into it. But I think that we're still at that gap where the investors today, with regards to sentiment in the US and a few other jurisdictions, are okay, should I be deploying that extra capital today or not? And so I think as soon as that window closes, hopefully in the next couple of months, then we'll see a little bit more capital injected into the market and into some of these companies. They'll start becoming a bit more compliant. That'll take a little bit of time, but I think by 2026, we'll see MiCA being much more kind of enforced and in place. And opportunity for 2025. I don't know. Enjoy the ride. I think it's a bit of a crazy one. We're really living in quite crazy times, honestly, with all the things happening. I don't know if any of you have seen that kind of little snippet of kind of like Twitter with kind of the variety of people from kind of like Elon Musk, Donald Trump, Kanye, all the things that they're saying. I think we're living in quite crazy times. So yeah, maybe just kind of take your head a little bit out of the water and just observe, because it's quite crazy time to be alive.
Thank you very much, gentlemen, for your insights. Thank you.